Good afternoon, everybody. Welcome to Selecting an Options Strategy webcast. I'm Connie Hill, Senior Manager, Trading and Derivatives here at Schwab. We are going to be talking a little bit today about using the risk profile a little bit more in depth. How many of you practiced with that last week? We showed you how to use it. We put on several trades. And today what we're going to do is we're going to go back and analyze some of those trades using the risk profile as well. So that'll be kind of nice to show you how to use it at the beginning as well as the trades developing. Now, I hope you're following me on X. I'm Connie Hill, CS. We have the pleasure of having Cameron May, good friend and veteran of the market of 25 plus years or something like that, I think. In any case, very experienced. So as you have those questions, go ahead, chat them in. I'll keep my eye on the chat to see what kind of questions come in. And then if there's some things I can't get to, Cameron will go ahead and help me with those kind of questions. Now, Cameron, speaking of Cameron, he's on X as well. He is Cameron May CS. As we find interesting things, we will post about them. And so if you've got an account, it's great to give us a follow, and then you can just kind of get some of those nuggets throughout the trading day. Let's go through our disclosures, and then we'll talk about our agenda, what we're going to do a little bit more specifically here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today should be intended for education and general use. Don't consider it a recommendation. We will be using the Paper Money software application. It's for educational purposes only. I think it's a fantastic tool as you're trying to learn different strategies, and you can go ahead and paper trade those rather than trying to do it in your live account. You want to make mistakes out in paper for sure. With long options, investors may lose 100% of the funds invested. Past performance of any security or strategy does not guarantee future results or success. Probability analysis results shown, such as the probability of an option expiring in the money, are theoretical in nature and are not guaranteed. We'll talk about that more generally in this session. We do talk about that quite a bit. All right. We're going to have a quick announcement, review the market conditions, kind of discuss what kind of strategies might be working given our market conditions. And then, of course, we're always going to look at a lot of examples. And here specifically what we're talking about is using that risk profile, kind of like the next step in your progress towards using it. I don't expect you guys to be experts yet. It takes a while of seeing it and seeing people use it before you start feeling comfortable that you're like, okay, I know where all the parts are and how they work. All right. So announcement would be, we've got some workshops coming up workshops. Where can you find information about those? If you come over here to your Schwab, come over to learn, and then come to Schwab coaching. This is where many of you are familiar, where there's a calendar of what webcasts we have coming up. Well, we also have these in-person events, and you go and view that calendar and you can see what's coming up. You know, maybe it's something in your area, maybe it's somewhere you wouldn't mind flying to and enjoying a little bit of time. We've got them all booked out for the rest of the year. So go out here, take a look, and see if there's something that you might be able to go to. You will love it. You will feel like some of you might feel like you're getting fed with a fire hose, but it's such a good feeling to be fed with the fire hose. So I'm going to encourage you to do that. Let's jump back here. All right. Option strategies. We have some bullish strategies, some bearish strategies, neutral strategies. The market really has been quite a bit bearish, and so we haven't had many opportunities really to use bullish strategies more recently. Last week, we focused a little bit on a neutral strategy. We focused on a calendar spread. We haven't had a lot of opportunity to use that in this class, so we spent some time setting up several calendars that we're going to follow up with today and show you how to do that in the risk using the risk profile tool. Okay. Now the market did end up fairly bearish or bullish. I take that back for the day. Interesting. All the indices were up. They pretty much held those levels. They pulled back off their highs a little bit. But overall, a strong bullish day. So if we have one bullish day, does that mean the trend has changed? No, not really. But what I would point out here, that we're seeing on the SPX, and this is true with the NDX as well, is that yesterday that the 50% Fibonacci line looked like maybe it was going to act as support. We didn't know until we saw what was going on today, but it did look like it really bounced there. And if you were looking at this, you'd go, oh yeah, we definitely have a bullish candle closing near its high, not all the way at its high, but still leaving a pretty bullish mark on the market. The other thing I'd point out here is this, where the stock went yesterday, the index in this case, put in a higher low. Okay, so this low right here was higher than the previous low, which is kind of like the first step, right? Getting either a higher high or a higher low is the first step to seeing a trend reversal. But just the one bounce doesn't mean the trend has changed. So I don't know if any of you have really changed your tune too much as far as what kind of strategies that you might be looking for. Okay, but keep this in mind. The volatility index, it dropped a little bit today, given that the market ran up. And so we saw some, basically the volatility index pulling back. It's still in what I would consider a higher range. Okay, it's up here above 30. You know, you get into the high 20s. And that's when you're like, okay, this is feeling a little bit more uncomfortable, right? People might start becoming a little bit more defensive. They might become a little bit more bearish when those volatility levels are higher. Okay, so of course it makes sense. We had a rally today, therefore the VIX was down a little bit, you know, over 9%, which is fairly significant, I would say. Now, I would like you in the chat to chat into me what strategies you feel like are working reasonably well for you right now. Okay, go ahead, answer that in the chat. What option strategies seem to be working well for you right now? And there might be some of you that are on the sidelines because you're like, I am just not comfortable, period. And so you might not be trading anything, and that's totally fine. There might be some of you that are saying, I'm going to use these market conditions to test some of these strategies that maybe I don't know the best, but maybe that might be good for a bearish market. Maybe testing those out in your paper money. And it could be any of these. Quite honestly, if you're feeling a little bit more, say, neutral on things, yeah, you might be using some neutral strategies here. Laura says, yeah, I'm in cash with a big smiley face. Greg says, I'm having luck with the wait and see options. And by that, Greg, do you mean the wait and see, allowing time to progress, like doing short verticals, like say maybe short call verticals, possibly a short put vertical, where you're just kind of allowing the stock to wiggle around a little bit, but not have to do too much for you? I'm kind of trying to interpret what you meant there. Frankie says, you know, you've been paper trading the Qs. Excellent. Sharon's saying it's short verticals seem to be working for her. That's fantastic, you guys. Last week, I told you we focused on the calendar spread. We also spent some time on the risk profile. So we are going to go back. We're going to look at those calendar spreads and one, see what the progress is. And actually, they're doing some things I'm glad that we're seeing. Not necessarily that they're behaving perfectly like we would want them to, but I'm liking what we're seeing because it's going to give us some good exposure here. So let's go ahead. Let's jump back to our charts. And the first one I'm going to bring up, I want it to be a little bit, not bad, but let's look at our lowest performing one, okay? Let's zoom in here. Maybe we'll zoom into about a 3-month look. And UPS is our least favorable position trade right now. We're down about 35 bucks on it. All of the time frame, or the time frame for each of these trades, we use the very same thing. We went short the May 2nd, the options expiring May 2nd. It was a 90. Both of these are 90 strikes. And then our longer dated option is the 16th of May. Okay, so we've got, and all of them were puts, put calendars, which would mean, yeah, we're in a neutral area, but we're slanted a little bit more towards the bearish side. So on UPS, let's go take a look at it. Keep in mind our strike price here was 90, and we're going to look at it on the charts as well as on the risk profile. So we really haven't had a chance to be in all that long. We had Friday was the holiday. And you can see the stock really hasn't really moved a whole lot. We got in on the day of the green oval, and I would say maybe it's drifted slightly higher, but not anything that you're like, oh, it broke through resistance or it put in a higher high or any of those types of things. It's just kind of dwindling. And so as it does that, that's where our short leg is very handy, right? As time decays, we're just like watching it work for us essentially. Ideally, though, we would like the stock to maybe drift down a little bit, head towards 90. Now, let's go over here. Keep in mind, UPS is at 96. As we come over to the risk profile tab, it brought over our UPS with it, so it's showing our UPS trade down here on the bottom. And what I did here, I put in a date. It actually doesn't like to keep my date. Let's see if it'll keep it a little bit better there. So this is going to be the furthest dated option expiration, okay? Because we've got the two different expirations, May 2nd, May 16th. And here is our peak profitability. Well, right now, ideally would say, well, our break-even range is anywhere between, if we come clear over here on the zero, about, let's say about 200, price of the stock maybe a little bit higher than 80. And over here, as it crosses through the zero line, it looks like maybe we're about 101 and some change, okay? And right now, yeah, we're not really seeing much profit in this calendar. However, it's got a wide range, okay? It only blipped up a little bit, okay? Now we don't want it to really move very far for us. We're looking for some movement that's more in a consolidated range. This one kind of drifted up a little bit, but one thing I told you last week is with calendars, if it starts going the wrong direction, you have a little bit of forgiveness in the trade because those deltas are so close to each other as far as the long and the short, okay? So here, yeah, it's not going the best direction, but we're only down 35 bucks on something that's kind of drifted the wrong direction. So we're not going to be panicked. I do want to talk about when we want to exit, and this is true for all of them. Ideally, in our most perfect world, we would want to be out of this short leg. We would want to be out before 4 days before options expiration. Some traders will like to start unwinding things in their spreads and calendars as well between 10 and 4 days before the option expires. So today's day 10. So we're going to be looking quite intently over the next few days to try to find an exit that is reasonable, that we're comfortable with. Okay, we're going to talk a little bit about what we might be comfortable with. Okay, let's look at the next one. Let's look at Target. Now on Target, we've got a 90 strike here, same time frames. We're up a little bit on this trade. Okay, we're up all of $84. Our calendar's gone from 140 that we paid for it up to 152. We'd love it to get a lot bigger though. Okay, calendars are one of these trades. Let's go over here to, and we'll bring up Target. These are one of those trades that you could have a really big payoff, but the probability of having a really big payoff is kind of small, right? I would say big payoff is between here, right? Maybe between, say, this is showing 88.88 and maybe 91.58 as far as the range of the stock possibly being. But quite honestly, if we paid on this one, we paid I think we said 140. I think if we do that math real quick, let me just peek back here. Yeah, this one was 140 on the Target. And so what if we made 100% of that? What if it went from 140 to 280 in terms of the value of that spread? Where would that put us here on our curves? So I'm going to just kind of keep your eye down in this area, and I'm going to do it based on through options expiration. That's going to be our turquoise colored line. Remember, this purple line is as of today or the date down here in the bottom right. Right now we have it set towards today's date, okay? But if it can go from 140 to 80. Okay, and I'm going to say we've got 7 contracts, so say 2.8 would be double the amount on that. And if we have 7 contracts, then that would be about, not quite, I mean, that's fairly high. We're showing a max gain here, maybe in the neighborhood of $1,500. And so, you know, if we are looking for our value to double, you know, then it is kind of getting up into this range up here. But do we have to be that optimistic? Do we have to say 100% gain? Well, we absolutely don't. We don't have to at all. I want you to take a quick look here. Our best performing one. Our best performing one is NVO on these calendars. Novo Nordisk, we have 15 contracts here, same periods of time. We're up right now about 405, and our spread has gone from 110 to 137. Is that a large amount? Not really. What if we could get a 50% return? Okay, 50% higher. Okay, then we might say, okay, we'll take our 1.1, multiply that by 1.5, because that would give us our value of 110 plus 50% more. Okay, so 1.1 times, and then we're going to go 1.5. That would mean the value of the spread would be up to about 165. Now, it's part of the way there, certainly isn't all of the way there. And it could be that some people say, you know, if I get X dollars, I'm happy, I'm content. I don't have to try to get some big home run type of return on this kind of a trade where we're just kind of looking at stuff that's not moving around a whole lot. Okay, so let's go take a look at Novo on our risk profile here. And what happens when you have a trade already in, like we do on these calendars, and you type in the ticker symbol, it's going to bring it up down here. Okay, you don't have to do anything magical or special. One thing you will want to be aware of is this field here that says hide simulations. The default is show all, which means show my positions plus any simulations that you might be thinking of. So typically here, I will have it say hide simulations so that we're only seeing the positions. Okay, so we'll hit hide simulations there. So if yours, for whatever reason, might look a little different, make sure you don't have a simulation sitting there that's calculating into the graph as well. I'm going to come out here. I'm going to reset this one. We're going to set slices to the break even for as far as it'll let me go here, which is just going to be the Saturday after May 2nd here. All right. And on this one, you can see our purple line here. This is our profit loss line as of when? Today. Okay. This is kind of graphing out. And so right now it's in a position of profitability. So it's actually the best position so far. What if you did say you wanted to lock in the profits? Yeah, we could certainly do that. I'm going to do that on one of them that says, yeah, if we can get X%, we're going to be happy. Okay. You could still continue to manually monitor it. Some people might come in and put an alert near their short strike. For example, let's say near 60 is going to be 59 and 61. Okay. We'd have to go out to our regular chart here. And I'm going to go to our set or create an alert. And I'm just going to fix this a little bit. Okay, so we said maybe the high side might be what? 61. Low side might be 59. So we're going to look for it to go, in this case, at or let's say, I guess just if it ticks it. I mean, right now the price of the stock is lower than that, so we'll leave it at or above on the 61. And then we'll create another alert for the 59 down here. Okay, so I'm just right mouse clicking, creating alert. And this one we're going to go at or below, and we're going to put in here 59. It's 91 cents away from that. Okay, but we're just kind of trying to find a narrow range. So if somebody wanted to track things that way, they're just kind of sitting on top of each other because they're so close. But if somebody wanted to track those, just with the alert without putting a number, a fixed number in there, you could. All right. Let's see. Somebody's saying that Tesla was a big miss. Some people might not be as surprised at that, but that's good to know because we're kind of loosely keeping an eye on stocks that are announcing earnings. If we wanted to, we won't do this on Novo, but let's do this on Target. Okay. Let's suppose we would be satisfied with, the value of this spread growing to say 30% greater than what it is, or 40%. Let's go 40%. Okay. That would mean we're going to take our $1.40 and multiply it times 1.4. The 0.4 is for that 40%. If we were doing 50%, we'd say 1.5 times our initial premium here of $1.40. Okay. So 140 times 1.4 for the 40%, that gives us a value of 196. And so we could, if we wanted to, this doesn't really trade in penny increments, so we're going to round that. Let's just go to 195. We would come in here, we would do a create closing order, and we'd pick this top one because we want to select both legs. And then in here, we're going to go ahead and put in that number, which is 195, that we are saying, hey, we'd be content if it came out and hit that for us. All right, and then we're going to make that good till canceled. You don't have to do this. You can monitor it manually, just like we have been. We could try to kind of get it in that narrow range, maybe watching the alerts to see if maybe we could get a little bit nicer. But if it goes here in this range, we're saying we are happy campers. We are happy to be able to try to lock in some profits at that point. Okay, we're not trying to hit the home run. All right. How many of you paper traded some of these calendars alongside me? How many of you did those one or any of those out in your paper money account? I would be curious to know how many of you are trying to kind of track it. One of the best things you can do to learn is to do some practice trading. Even, I've talked to people and they're like, I don't think I know enough to practice trade. And in reality, you do. Okay. And that is one of the quickest ways to learn is by doing some paper trading. All right. Go ahead, make those mistakes, figure out those rules in your paper money account. So I'm going to just kind of needle you a little bit. If you haven't been doing paper trades and you need to, then yeah, start doing some. Okay. Let's come out here to our charts. I'll still keep an eye and see how many of you are practice trading any of these calendars. All of them, that short option expiring 10 days out. So we're going to be keeping a close eye on it because by the time we get to next Tuesday, then it's going to be what? It's going to be like 3 days out, 4 days out to options expiration. Okay. All right. Lars says, I don't get calendars. That's okay. You don't have to paper trade something until you feel like you have an idea of even what you're looking for. But one way to be able to kind of help that kick in a little bit faster is by doing the trade and then just watching it. Maybe you just do one contract in your paper money account, right? But then you can kind of just watch. The idea with the calendar is it would be ideal, if it came up here to our short strike. But that's kind of a pie in the sky type of thing, okay? And that's why I'm suggesting maybe we just look at a lower range on the profit loss graph because we're not expecting the stock to make a very big move. Now we have different stocks that are up, that are announcing earnings and things like that you might go, that stock moves a lot when they announce earnings. And so you might choose a different type of strategy. Now you could do a calendar if you wanted, but maybe if you weren't expecting a lot of movement, then that might be when you might pull in a calendar. All right, let's take a look here. Michael says, no, he either no idea what calendars are. Maybe I want to spend a little bit more time on that before going to a couple of new example trades. Okay, let's spend a little bit more time here for a moment. Let's take Novo, NVO. Okay, let's come out to its chart. And we know its short strike is 60. Okay, so as we zoom in here, and this is the one we put alerts on. Oh, now we can kind of see them. A buck on either side of our strike price of 60. With calendars, you're trying to capture a lot of premium from that front option that you sell, the one that expires on May 2nd. But we don't expect big movement from the stock. We expect more neutral movement, which is why maybe it can go up a little bit, go down a little bit, stay kind of in a shorter range, and it still could work out to be profitable. And even though traders try to get out, in any kind of a spread or trade, 4 to 10 days before options expiration, some traders find that they actually have to hold it kind of to the long end of that window to really be able to see some profitability with the trade versus some other trades that we do. We start seeing some profitability early on in the trade sometimes, especially if they move the direction we expect them to. And then if they don't go the direction we expected them to, we learn a lot pretty quickly from them as well. And so with calendars, we're looking for defined movement, smaller movement, okay, staying in a range. Okay, so hopefully that will help a little bit. Wiley's announcing our advanced option strategies class. And I appreciate you putting that out there, Wiley. That's very, very considerate of you, saying, hey, they do an advanced strategies class where we do get into more so some of the advanced strategies with multi-legs, some that we don't cover as much in our class, but we will cover those a lot in the advanced strategies. So appreciate you mentioning that. Yeah, it's from 11 to 11:45 on Fridays. Brent Morris teaches that class. He does a fabulous job with them. All right, let's look at some newer opportunities, and we're not going to be as complicated, okay? We're going to kind of say, okay, these calendars are a complicated trade, and that's what we're going to use our brain power on. Let's do some that maybe are a little bit more comfortable with. All right. So first one up, we're going to take a look at is GE Aerospace. Now they had their earnings already. Let's kind of zoom in here. Looks like they announced this morning before the market opened, and the market liked what they had to say. Right? The market liked, and it stayed there most of the day. In fact, it ended up over 6%. Okay. We would look at this maybe as a technician and say, all right, this low part here, that's an L, is definitely higher than this low down here. So we've got a higher low. And what would it take to have a higher high? Well, to have a higher high, let me grab this guy. We probably would want it to maybe go above some resistance, maybe close above some resistance. So today it kind of ran up to that area. But if it did get a little bit higher, some people might look at that and go, okay, we have a higher high exceeding these areas to go along with the higher low. And that can be the beginning point of a trend change. Okay. Just because we have, say, the higher low at this point doesn't necessarily mean that we've got a trend change. But if we got that set, this second piece of the information, at least a higher high to go along with the higher low, then some people might feel a little bit comfortable maybe doing something knowing that perhaps the trend was reversing here. Now I'm going to back up a little bit. Some people might do this if they see, for example, a price pattern that's like a reversal price pattern, like an inverted head and shoulders or a double bottom or a triple bottom. Quite honestly, we don't really see much of that there. I think somebody could maybe say, well, here's a shoulder, although I would expect the shoulder to kind of be down lower normally, right? They might say there's a very high shoulder and a head, and maybe making out a better positioned shoulder here, saying this shoulder, yeah, I would say it's not ideal. We'd want it to be down quite a bit lower, but just not enough to exceed where the head goes, okay? So people might feel more comfortable if they see a lot of these things lining up. Maybe they see also a divergence of some sort, a divergence with an RSI or MACD. That can be a common thing as well. So what we're going to look for here is we're going to say we're looking to do a bullish trade we're just going to do a short put vertical on this, but we're going to put conditions. We're going to say, okay, stock, you got to go higher than where you went today. Today's high is exactly 190. Okay. And so what we're going to say is, okay, stock, you have to go higher than today's high in order for us to put on a trade. Okay. So we're going to put that on as a conditional entry. Initially here, I was thinking, when I looked at it earlier, the high was 189, but now it's 190. Let's say we want this to be 190 and 25 cents. Okay. So I'm going to kind of mark that down in here. 190.25 is going to be our conditional entry on this. Okay, let's set it up. What do we got going on here? This trades a lot of contracts, right? Over 12 million shares traded today. Of course, they had earnings. And so, of course, that many times will invite more market activity, right? But it has weeklies. But, the May 16s here kind of fall into a sweet spot that a lot of traders like to do, where they want to sell 20 to 40 days worth of time. Sometimes we have to extend it a little bit out, maybe 20 to 50 days worth of time. So this is kind of at the lower range in terms of how much time somebody might consider selling. Now, we're looking to do a bullish trade if the stock goes up. So we're going to be looking over here on the put side. Let's see if these still make sense here. We might have to shift our numbers a little bit. I was looking to do here. I was looking actually to do 180 and 172.50. There's if we're just doing a couple contracts, people might feel comfortable with that. You really don't want your contracts to be a big share of the open interest. We just want a little teeny part of the open interest. Let's just see what the numbers look like. This is a 27. Stock has adjusted a little bit. We may have to go out here to our 180. In fact, I think we're going to have to. So let's just start here. And let's say sell vertical. It's going to give us, looks like, a credit of about 50 cents. Which I'm not that excited about. The spread has really, since the market closed, really spread out. Earlier today, when I was looking at this before the market closed, it was like within 20 cents. So this is really showing a big spread. So some people might be really concerned about that. Just know, when the market opens in the morning, what we're likely to see is that distance in the spread just kind of shrink back up together again. Okay. Sia says, would May 23 for 30 days be okay? We could pull that up and see. Let's just kind of open it up here. If we come out to our puts, here's our open interest column. There's really not a lot out here. I'd say it's pretty dry. So I would say, you were saying the 23rd. 23rd is pretty dry as well. So the 30 is really dry. The 23rd is really dry. So we're just going to stick with the ones that expire on 16 of May. All right. Let's maybe shift a little bit. That credit might have been a little bit lower for what we're looking for. So let's start out at a 33 delta. Let's go ahead and sell this vertical. And it's coming in at about 123, which I think is going to be more likely what we might be looking for. Okay. So we are willing to say, all right, we're going to not make any more than $1.23 on this spread. And for our max loss, we're going to say take $5 minus 1.23. And we're going to say 377. We're willing to risk 377 to have the high probability, 63% plus, that this option expires out of the money. So let me just kind of write that number out here. But that's going to be our max loss, and 123 is our max gain. Now, many traders like to know what kind of percent that is. Well, what's that return going to be? I have to know if this is worth the squeeze here on it. Okay, so let's do it. Let's take our $1.23, and we're going to divide that by our 3.77. That's going to say that's about 32%. Okay, so many traders might target high 20s, some might target in the 30s. People looking for a bigger payoff and a smaller probability might look at at it, maybe a 40 something delta. So we're going to stick with this 182.50. Oh, do you know what? You're right. Thank you so much. This is really a $2.50 widespread, not a $5 widespread. Let's redo this. 2.5. That's why our 180 was actually looking good. My brain got put to a $5 spread because initially I was thinking 180 has a lot, 175 has a lot. Let's do it this way. We're going to just do a sell vertical. We're going to start this over, and we're going to spread it out by 5. Okay, so instead of 182.50, let's just grab our 180 and make that. I did that wrong. Let's go. Because I changed that, right? Yeah, we want this to be 175. There we go. That is looking closer to what it looked like. This is going to be about a 33%. If we take 1 divided by 4, let's see what that gives us, about 25%. So some might say, no, that's not enough. Some people would say, well, I like 1% for however many days there are left till it expires. Some people might use that as a gauge. Using that as a gauge, then we might say, okay, maybe it's good enough for us. Okay, knowing that we're going to risk in the neighborhood of almost $4 a share, right? We probably shouldn't. In this account, typically we're willing to risk about $1,500. Looking at this, it is kind of going a little bit counter trend, so maybe we want to bring our risk down a little bit. Okay, so instead of risking for $1,500, let's do this. Let's just do 2 contracts here. That would put us well over that threshold. We'd be risking in the neighborhood of $800. And let's put on an exit order like we typically do. We'll do a first trigger sequential, and we're going to say go buy back this spread if we can go buy it back when we've got a chunk of it. So we'll create that opposite order. What's a chunk of a dollar? Some people might say, you know, if I get 70%, I'm happy. If I get 80%, I'm happy. Okay. In this case, let's suppose that we're happy if we got 70% and only 30% was left. That would that math makes it a little easier here. Would say let's go buy it for 30 cents, make this good till canceled, and then we're going to go ahead and submit it. Okay, this one is going to go into our options strategies bucket for us to follow up on. All right, let's see here. Let's go to our next one. Again, we're going to be doing maybe something not as complicated as calendars, even though we're going to continue to monitor those calendars. I want to look at this one. This one could be pretty interesting for us. And that reminds me, I did something wrong on that trade. We've got to put in the conditional order based on the price of the stock going to, what did I say? Had to go to, let's go back here. I apologize, guys. This was on GE. We're saying it's got to get higher than where it was today. And so we had said it needed to get to 1. The high was 190 on the dot. So we were going to say it had to go to 190.25. Okay. 190.25. Let's go add that into our trade. So we're just going to come to our working orders here. Here's our little trade. We're going to do a cancel replace of just the initial order. Okay. And then we're going to put a condition on it. We're going to change it to a market. And then we're going to say, okay, this is what you have to do here, GE. You have to go and mark, which Thinkorswim likes that midpoint area, that mark. We want it to be greater than or equal to 90.25. If it doesn't go that direction, then we don't want to get filled. Let's make sure this is going the right way. We need to flip our arrow to go greater than, and then we'll hit save. Now, the other thing we might need to consider here is that we may not, the order that we have filled right now that's going to trigger with it might be looking for too much profit. So after it gets filled, we may want to go back and see if we want to adjust that. Okay. Right now we have it saying, okay, let's buy it back about 70% of a buck, but this may fill at a little bit lower than that. So we're going to go ahead. We're going to send that on. All right. This next one, let's get back to our chart here. Let's go to AXP, American Express. This stock is looking like it's over its earnings. Did the market like its earnings? Not especially. We're looking here that, we did get a little bit of a rally out of it, but many times if the next day the market's going to be back to whatever its trend is, this little move might not really amount to much. Okay. So we're going to look to get into this if the stock goes lower than today's low. Today's low is 246.37. So let's put that at 246.30. All right. Again, we're going to make it conditional. So we come over here to the trade tab. These options are just fine again, but we're on the bearish side of things. And so let's look out at a 30-something delta. Let's see if this still might look appropriate. Let's see. Yeah, we're going to start at a 260 strike price, which is at a 40 delta. Stock has got to drop some. We're going to put a condition on it. Okay. So we're just going to say sell vertical. And now we'll pick sell vertical there. Looks like the credit we're looking for here is about $1.07, but we're saying the stock has to drop. If it does not drop, we don't want to be filled. If it were to drop, this is going to be a lower credit than that. Okay. Let's go ahead. We can do 4 contracts here. So we'll position size it to 4. We won't be exceeding that $1,500. And let's go in here and change it to what? A market. And then we're going to put on that condition. That condition here is AXP. We'll leave the arrow that direction. Lower than 246.30. Okay, needs to drop that low. And so less than or equal to 246.30. Okay, we don't know exactly what price it would fill at, but what we'll do once it does fill, we'll come back and put in an exit order and say, when we get a chunk of it, go ahead and get us out of the trade. All right, we're going to submit this. This is going to go in our options strategies bucket as well. All right. Let's see why this is. You didn't see something in the calendar. Not sure what you meant by that, Wiley. Yeah, I'm not positive what you mean about that. Okay, so just kind of to summarize, we're watching these calendars. We put in an exit order for our, if we could get a nice chunk of our trade, right? We said, I think 30 or 40% above what that calendar was looking at. Great. Put in 2 new trades here. So we've got a GE short put vertical. Now we've got an AXP short call vertical. Okay. So we have quite a few things that we are going to have to keep our eye on. Very good. Are there any questions as we wrap things up here? I know my time is almost gone. If you do have any questions, yeah, go ahead and let us know. I know Cameron has been kept busy here. Thank you, Cameron, for helping out with those questions. Before we sign off, I want to make sure that you guys have noticed or have been told a couple of the new things out in our Trader Talks channel. You'll want to subscribe if you haven't subscribed yet. It makes it really easy to find our stuff. But one thing that you might not know is we have some new short videos. These are seriously very, very short, like 4 minutes or less. And they're just on little topics, okay? And you can see there's been a lot of viewing activity already on this. This series right here is talking about trend and identifying shorter trends versus longer trends, okay? So that is something new that you might want to go take a look at. Well, Cameron, I appreciate your help here today. And to each of you, appreciate your questions, your comments, the things that you're discussing and letting me know. And we've got a boatload of trades we're going to follow up with next time. All right. So this is the last class of the day. We'll be back tomorrow morning, bright and early, right at the opening bell. So we'll see you then. Have a good evening. Bye-bye.